Alright, boys. Friday, thank God. Been a long week. And literally not much has moved. A little bit of movement on the pound, but all in all, we're back at some pretty familiar levels here. In particular, Euro is not doing anything. But we're starting to get a little bit of US dollar strength against some of the pairs that we've been trying to play on the long side. Make it a little bit more dangerous. Definitely, the spider sense is telling me that it is a little more dangerous than usual to be buying this Aussie dip. So in theory, you should be buying this dip. It's a previous resistance, turn support. I don't know. I don't want to do it this time. Same on the Kiwi dollar. I don't like to look at those lines, but it's also, the timing of it in terms of how long it's been in an uptrend comes into play a little bit as well. And of all the dips that I'm just going to be cautious on, it's this one. See if it comes back up. If it comes back up, yeah, okay, we're playing up to 80, 70, 85, 78.50. But just in the meantime, there's no need to buy a trade where you feel uncomfortable. And this one in particular, I feel a little uncomfortable. Dollar yen was the big mover last night after our little update. Dollar yen and oil. We'll look at dollar yen first. Back above 102 during the Asian session today, which is important given that the Asians, Japanese especially, are selling the dollar yen. We consolidated and remained strong. So this has got impact for all the yen crosses. While the majors against the US dollar might not be in play, I think most of the yen crosses here are in play to the long side. So pick your favorite pair that you want to be buying against the US dollar. Have a look at the yen cross. And while stock markets are on the rampage and they made new highs last night over in the US, all three of them, Dow, Nasdaq, and S&P, those crosses should do quite well. The one I'm going to be looking at today, because of that large oil move last night, is the Canadian dollar, Japanese yen pair. All right, so obviously we're looking to buy it. Now, for a while we were talking about the Canadian dollar, and early in the week we were selling it, and we got a little bit of that move. That's great. Actually, we sold here. Then the market, while we were sleeping in an update, went down to 130, bounced off, it came back up here, and the US dollar was doing its thing, trying to rally, and also the oil was selling off. So we closed out the trade, but it was a little early because we got that news last night, which was not predictable, that because this chart was looking different, right, when that 130 held. We got that news from Saudi Arabia that they're looking for the new OPEC meeting, also looking for measures to stabilize the prices in oil, and what that led to was another round of a surge, actually 4% in oil, but more importantly, it sort of changed the technicals in oil to the top side. New high, low, also broke back in that previous resistance at 44. If we get back into the previous range where the market held for a few months, then this is really good for the Canadian dollar. And the same things that we were talking about earlier in the week, as in the Canadian dollar's underperformed in recent times, is true. So there is not easy pips, but relatively easy movement for the Canadian dollar to the downside here, towards that 128 level, just to play catch up with the Aussie at 76, above 76. All right, so I'm not saying that this is broken trend lines. I'm not saying that this is a technical move. This is mostly to do with a sentiment catch up, change in the longs bailing, because the longs had ideas of 135, and I was one of them for a little bit. Okay, but if we can do some serious damage here, a little bit, another red line, it's going to look a bit different. It's going to look a little bit more bearish, and if risk remains on and oil continues higher, then I think the path of the risk resistance will be down. All these longs that have been building up have to get out. Easy back to 128, even lower in that scenario. If the US dollar remains, can hold on, and the oil retreats, and maybe stock markets reverse, then perhaps we're going back up above 130. But I think it's showing a little clear indication it wants to go lower. Nothing's been simple lately though, so hopefully it is clean. I don't want to have to explain what went wrong on Monday to us if the market reverses back above 130 today. So I sold in Asia near that 130 level. Let me put a little bit in the account as well. The way I'm actually playing this though is what we talked about earlier, is CAD long rather than CAD yen long rather than dollar CAD short, which is the same sort of trade, but just different pair that we're selling against the Canadian dollar. Alright, so let's bring that up. I'm not going to sell just here on the dollar CAD, but it's one I'm looking at. CAD yen, CAD yen, CAD yen. Look at the daily first. Does the trade have potential to the top side? Of course. 200-day moving average is well away. Has it shown a little bit of basing? Yes. Has there been signs of buying? Yes. It's meeting a few criteria. Is it against the trend? A little bit. Alright, but we've got reasons with that oil move and its underperformance. You know, compare this chart to the daily on the Aussie. It's a lot higher relatively, right? Markets remained comparatively higher there, and so I'm going to buy a little bit of this. Not the best price, but just to enter into something here. And target can be quite aggressive, right? So I mean, 80 is the medium term target. 81.50 is very possible. And where do we want it not to go below? If you're not in the trade, probably wait for a pullback if we get one, but about 100 points there. Alright, so that's a good risk reward, 100 to 300. But the trade sort of makes sense, and there's a number of ways it can go up. Even if dollar yen rolls over here, you know, that should mean that the dollar CAD's having a nice little run, and you know, sort of cemented its move below 130. Once everyone gets the memo that the dollar CAD's going lower, I think the selling will accelerate, and you know, that 130 level has held a few times, and the fact that we broke it is not nothing, and oil is not exactly reversing here either. So some good times ahead in that particular trade, I believe. The main ways this will come undone is either stocks down, dollar yen doing some crazy stuff on the retail sales later, or oil down. Alright, so that's my trade of the day. We're trying to buy CAD again. We tried it earlier. We made some money earlier in the week, but we're going to try again. Alright, so traders been asking me a lot of the clients that ring me up asking me what to trade, what to do about the Aussie. I talked about that earlier. Do not buy it this time, just to be safe. We can have a day off buying it. Let's see if it goes back below. We'll see what the price action is like in the lower 76s if we get that. Potentially still buying, but just want to see, you know, like maybe a bit of a clean out of what you call stale longs, and you know, we'll be making our mind up here. Can definitely be going long into some Aussie yens as well whenever we see the Aussie dollar find a little bit of support, but yeah, not at the moment. Kiwi is actually starting to threaten people stops, so let's bring up the Kiwi quickly, because a lot of you bought after a lot of people have been buying the Kiwi in general just because it's been so strong. And then you got that smashing high rally after the RBNZ cut, and then it's been just weakening, and so people you know, pulling their hair out saying, what the hell's going on now? Why is it going down now of all times? Yeah, I mean, maybe the market's positioned long now, right? And you know, whenever it becomes too easy, especially on this pair, you know, probably more stops lower than higher after that clean out to the top side. So clean out to the bottom side, similar to the Aussie. I don't think it's a trend change. I think it's just looking for stops, looking for demand somewhere, and I think probably low 71s as well. Alright, if we get back below 70-80, that would be dangerous. But if we buy down here at 71.30, all right, put your stop at 70.70, targeting 73. It's a good risk reward trade. Just wait for certain signs that this pair is basing. But it feels like it wants to go lower, right? And you know, you're allowed to not buy every dip. So this is where you should be buying if you're, buyer on dip, but just let it be. The euro is untradeable. Almost got a breakout to the top side early in the week. Since then, 30-40 pip ranges. Maybe that's the plan. Put it to sleep so no one trades it. So there's no movement. So there's stability, and stability in FX is actually pretty good for banks and for companies and investors in general, just to know there's no currency risk exposure. But I mean, I'm secretly still a favor on the top side. There's nothing to favor that happening. The pound is the ugly duckling of the whole market, just relentlessly pushing lower. Good or bad news, doesn't seem to matter. It seems like the sellers are in control though, and the buyers are failing on every rally. And there's no catalyst to buy yet, right? So the market might just burn a slow burn down. We've seen slow burns before in the currency markets. We saw one in the euro. The euro, it was well announced what was going to happen with all the QE and everything, but it still kept on falling from 120 all the way to 105 after it had fallen from 138 all the way down to 120 a couple of years ago. And then there was just a continuation of that slow selling. So I'll bring it up so we know what we're talking about. Just searching for support and overextended, I suppose, on many. I don't know, it wasn't that slow. So people were looking for that 120 level to hold, after they announced that do whatever it takes type rubbish. And then the market kept on selling and didn't really find support at all. So there's no reason that the pound can't do something similar, below 128, go down to 125, but not stop, and then bounce up, but then go below 120. I don't know. There's no reason to be a hero, right? If the pound if there seems to be some bullish action, we can hop in on the long side. I'm not a seller of the pound. I like to be able to sleep at night. And because the market's so heavily short, at some point there's going to be that short squeeze, and I'm not fully keyed in, with this pair at the moment. And so, I've let it be on its own for a while, so I'm just not interested. The pair that's getting the most attention inside the pound complex is the pound yen, though. People want to buy that always for that nice 300 or 400 pip rally that you get every now and again. But it's looking pretty sick as well. Let's bring up the pound yen. It's targeting those post-Brexit lows. So look, I can sort of see why you want to buy it. It's close enough to the 130 level, but if we're going to 128 on the pound and below, then perhaps we're going even lower here on the pound yen, and the level that we're looking at way back. Just let me see where we have to go. Maybe weekly. Weekly should be enough. About 118, I believe. All right. So yeah, it's got some movement here. This is pre Abenomics and Kuroda's nuclear monetary policy over in Japan. Big 7,000 pip rally though, not nothing. So yeah, obviously we want to play the hero game. You play it closer to 120. The trades that we have at the moment are long euro yen, just because it's a little bit. I'm still hoping sneakily that the euro is gonna come to life to the top side. Also dollar yen supporting that, so the euro yen's doing okay here. These are all small trades though. There's no conviction in these trades at these levels, and the euro is still holding that, not getting stopped out because the market's not moving. And the Aussie yen was a trade we've had for a little while. That one's a little dangerous given the price action in the Aussie. Okay, the Aussie is rolling over here, trying to find support, probably taking out some stops, and it might take down the Aussie yen with it. In terms of the Aussie Kiwi, that's our favorite little cross. We took profit yesterday. We're looking for a re-entry here. So we want the Aussie to fall actually faster than the Kiwi so we can get a little buy. I mean, you can even buy a little bit here. I'm going to buy just a little bit just so I'm in. This is not the best strategy, but the pretense of buying just to be in for me is that if it falls, I buy more. So I don't mind buying. I don't mind buying this, but I'm just going to be easing into my trade. I'd be very surprised if we go below 105, given that the RBNZ's got a couple more rate cuts and the RBA probably doesn't. So over time, as that becomes reality, then a significant low could be put in place. You're seeing the higher lows here on the daily, and on the weekly, it doesn't really show you how important that level is. But on the monthly, you can see how important that 105. That range is held for 3 decades. So, you know, if you're looking for a pair that will rally in a normalization, or in the further deterioration of the economy, then this one is a pretty good one. The scenario where this goes below parity is a hard one to see. It's where the RBA cuts and the RBNZ does not going forward. So yeah, I'm quite happy to buy that pair. It's a relatively good risk reward longer term trade that I can sort of add in. Like even if it's not going up, it's probably range trading, right? And that range trading should give you enough pips anyway. So between say 105 and 108. So it does go into ranges a fair bit as well. So that's one thing it might do, but that's fine for us. Just buying dips rather than selling rallies is my preferred way. Euro Swiss is not back at the buy level, but it's getting close. So we've been buying every dip towards 108, playing that range here. 3 or 4 times now we've been buying that range, and it seems like it's on its way to the bottom end. I'm just going to put a limit order. This time we might buy a little bit more. This pair, why not you let me do your limit order? Alright. I don't mind being involved in this, but only to the top side once again. Alright, so that's enough ranting. Let me see if there's any questions in the room. Let's bring up the main charts again. Alright. What are you guys ranting about in here? Good boy, is he still alive? I don't know. I haven't looked. I thought he might last longer than a couple of weeks, so that was a bit poor. Sounds very low, guys. Hello, hello, hello. Yeah, look, I'll set it up properly with the beast. Just fixing a few things on the old computer. So this is, I mean, the old big computer. This is just the spare one. What's in that? That's Tanqueray, Potter. From London, mate. From London. 7:30 Friday. What am I doing? Out with the boys at the pub? No. Giving some market update to the rats. Look at that nice little selling here, buying here in the oil. Dollar CAD had that little nascent rally. Let's sell into that. Fuck it, just make some money. What's this guy's name? Norbert says, "This is Tony, mate. You must be new." And the music was Requiem for a Dream, Lord of the Rings at the start. Right, so what we'll do here though is we'll go through a couple of these trades in the room. Because there's no dislike button anymore, maybe I'm gonna have to be the disliker or liker. Let's turn off that though. Alright, Euro Aussie long. Yeah, makes sense with the Aussie being sold. Euro not doing much. It's basically the same as Aussie short. It's not the worst trade in the world. Has it broken this resistance yet though? Let's have a little look. I don't know about the level that you've entered. Lower 144 is very key in this trade. Right, the level's been holding for a while. Yeah, look, it's not the worst trade in the world. It could come right. Give a little like up, little thumbs up. Dollar Swiss long. A lot of talk about this trade. A lot of talk about this pair in the market at the moment. We're actually going to do CAD Swiss long instead of CAD Yen long, but I didn't want to have to rant about what's going on in the Swiss. I actually still don't want to rant about what's going on with the Swiss, but suffice to say, dollar Swiss looks pretty good in many scenarios going forward. So it's probably safer than dollar yen long. His TPs are quite good. His risk reward is quite good. Yeah, that's a good trade. Does he have reasoning? He's got letters. A. Is that technical that I don't know about going on here? Is that like some supply and demand stuff or what? What's going on there? Yeah, that's a very achievable take profit as well. You need some good US data though, or you just need that Euro Swiss to start busting up. Swiss to be sold generally. It's got a lot of ways to win. Euro pound long. Now that's aggressive. That's an aggressive trade. We're getting quite high here on the euro pound. Now technically, yeah, that does look like we're heading up to 86.50 at least, and then the next extension, you know, up to maybe 87, 88, as this pound is on its back legs, right? But I mean, it's at some point the euro is going to move, right? The euro is not moving at the moment, so it's like, well, what's the euro's next move as well? It's easy to sell the pound against everything, but you know, make it clear why you're picking the euro. Let me know why you're picking the euro rather than any other pair, which would make a little bit more sense at the moment. You know, give me the rationale a little bit. TP, he wants just trailing stop. Okay. Trailing stop on this pair is not the best idea because there is reversals every time on this trade, on this actual pair. Yeah. But it is the right direction, so you can't really. You got balls behind that. There's a lot of safer trades in that one. That one's You have to keep watching it. But I'm not sure what your usual take profits are. I mean, your take profits your stop is very small, so maybe your take profit's very small. So that's got a higher probability. When it reverses though, that reverses for 200 points. So yeah, speak of the devil. Speak of the devil. We're just talking about traders coming at me asking me to do pound yen long. Yeah. Okay, so everything I said about the pound yen long earlier in the talk is completely applied to this particular trade. I understand exactly where this guy's coming from, and he's probably going to be donating to the Pound Survivors Fund, or asking for a payout from it. It's very unlikely that the pound is over the selling. So the fact that you're saying to me right now that this is the low of the second leg of the pound sell-off, right here, right now, is the low, because that's the only rationale you're going to have to be buying the pound yen right now. That you've done it, you've picked the low. That's it. That's the low for the whole. That's for the whole Brexit sell-off. That's it. Okay, now that's a little hard to see to me. So this is a huge call. Huge call. And trade with care, yes, good idea. Trade with care. So yeah, I'm gonna not give that a thumbs up because that's against the trend for one, and also incredibly aggressive trade. Rog, what else are you in here? Long dollar yen. Yeah, long dollar yen is fine, mate. Long dollar yen is fine. Where's your take profit? Maybe you've been stopped out of that one already. Just I'm not sure how successful your scalping has been, but let's if you want to trade another way, then I can help you. Okay. Look, it's the right direction again, but the risk reward here is a bit hard to see. You probably got stopped out of that trade, yeah. This was 5 hours ago. We can just check. Yeah. Came back down again. Alright guys, not bad trades today. I'll have a look at a couple more on Monday as well. Time for a little bank research analysis. Got a few to go through today. I won't go through that. That. So the Chinese news was a little poor today, but that's another reason not to be too aggressive on this Aussie dip. I mean, it didn't miss by much, but it definitely was a little weaker than forecast. And it definitely continues the trend of slowdown, gradual slowdown in the growth. I mean, it's still growing, but slowly, slower. Yeah, there's a few traders who are long the CAD versus the Aussie and the New Zealand dollar. Now that trade is working out well in the last couple of days, ever since that reversal from the Kiwi. But the next move on that is reliant on whether this dip in the Aussie gets bought and whether oil continues its not uptrend, its attempted rally. I mean, how long the effect of the OPEC talk does have on oil is hard to see. But if it's enough to put a base in on the oil, then that might be enough for the CAD to continue to outperform relative to the Aussie and the Kiwi in the next couple of weeks. So it doesn't really have to rally so much as just not fall. And if the CAD can give enough technical damage today on the dollar CAD, so if we can close underneath 130, bring that up, close underneath 130, then you're looking at pretty bearish technical setup. Yeah. Yeah. All right, so let the tech traders sell it for you. US retail sales will be interesting today. Might get a little bit more play than usual just because the market's searching for a reason to rally or sell off. At the moment, there's not much rhyme and reason in some of these US dollar moves. And next week is not much better. Next week there's not much data either, so it could be more of the same. Trying to make trades out of nothing. Forcing trades a little bit, guys. It's a little dangerous to be forcing trades. Yeah, so these guys are seeing it as well. Both AED and New Zealand dollar rolled off the highs, and from a technical perspective, are showing tentative signs of rolling over. Look at that for a risk disclaimer. I never read this one. That's very funny. That's hilarious. As a market maker, we stand ready to facilitate customer demand on both sides of the market in a wide array of instruments, including those mentioned in this email, subject to prevailing market conditions. The email is distributed for information purposes only and does not constitute research, nor is it intended as such. What? What? Just information. Just information. The information contained in this document is based on material we believe to be reliable. However, we do not represent that it is accurate, current, complete, or error-free. Wow. I mean, this is what's going on in the banking world, right? Completely overrun by compliance. This is out of control, this disclaimer. This document does not constitute an offer, invitation to offer, or a recommendation to enter into any transaction. This material does not represent a formal or official view of Deutsche Bank, as the views expressed herein are solely those of the author from Deutsche Bank, which may differ from those of Deutsche Bank research. Oh wow. That's a pretty crazy disclaimer, guys. But then again, they're getting sued for billions every year, so I can't see where they're coming from. All right, let's just see. I'll be in the chat room probably a little bit later for the retail sales there. We'll see how these trades develop. Basically, long CAD yen, short dollar CAD, long Aussie Kiwi, and looking to buy the Euro Swiss in the dip. Alright guys, good luck to your trading. Be a little bit safe, it is Friday. Things can reverse here for no reason. Keep an eye on oil. Keep an eye on the stock market, just make sure it's not doing anything crazy. And also be ready in 3 hours for that US retail sales, the main risk event for the week almost, from the US data perspective.